Welcome to Local Business Spotlight, everyone. I'm Troy Thompson. Joining me today is Mr. Bruce Dodd from People's Home Equity. And today we're talking about your mortgage and how you may be able to refinance your home. Welcome to the show, buddy.
It's always good.
Okay, why are we looking, or why do most people look at refinancing? Give me a few examples on why they would need to do that.
Usually those come up in one of a couple reasons.
Yeah.
One is what we call a needs-based refinance. Let's say, for example, you want to make tons of improvements to the property.
Right.
And you'd rather use the equity in the home than cash out your pocket. That's one reason. Another reason is, let's say you want to change the terms of your loan. Let's say you started off with a 30-year loan. Things are better for you in life. You'd like to finance it into a shorter period of time. So that's what's called a rate and term refinance. Some people are lower in interest rates, so that would be hence the rate and term refinance.
I want to go back to the first option that you gave us. Now, let's just say that we want to refinance the home because we want to spend $60,000 on renovations. But we only have $60,000 worth of equity in the property because we bought it 12 months ago. Let's just say that. Let's give it an option here. Is it possible to be at 100% mortgage with your home nowadays?
Not typically. So then there's some other strategies one can look at. You can look at a home equity line of credit, which can be which often can go to a little higher percentage of what your house is worth.
Yeah.
But sometimes you're pairing a first and a second together, so there just can be some different options.
And that's why we need someone like you to be able to give us that advice, right?
Sure.
And what do you say to people when they come to you about refinancing their home? What are they expected to bring to the table?
Well, first of all, let's talk a little bit about questions I'm going to ask.
Yeah.
And because I think that's important. One thing is, how long are we planning on staying in the house? Because when you refinance, it's going to cost money to do it. So we're going to have closing costs. So we want to make sure that the purpose of the loan makes sense to pay those closing costs. We want to talk about how long you want to be in the house. What's important to you? Is it important to you to pay off the house in the near future, or just what are your goals? What are your overall financial goals? Because it's a tactic you could use in your overall financial plan, but you need to be thinking about your overall financial plan.
Interesting. You said to me on another segment once that, earlier in this one I should say, about refinancing maybe if you are 50. Okay. You said something interesting. Maybe someone may not want to pay off their mortgage.
Sure.
Why wouldn't you just rent?
Well, a couple things. You're gaining equity. You own the property. So whether or not there's a mortgage on it doesn't mean you're not making money on the property. A typical property in the Chattanooga area is going to grow in value by about 5% a year. If you look back to the year 2000, including the bad years of the mortgage crisis, properties have gone up by about 5%, excluding last year. So you're gaining value. So the number one asset that creates the most wealth in the United States is real estate. And so part of how you gain in real estate is that capital appreciation.
Interesting. One of our viewers wrote into you and wanted to ask, what's the difference between a fixed rate mortgage, an adjustable rate mortgage, and a home equity line of credit?
Okay.
And how do we know what's the right one to take?
So it just depends on your situation. You want to have a conversation. A fixed rate mortgage means the interest rate can't go up and it's not going to go down. Whatever you sign up for, that's what you get. Done. That's what most people have been doing because we've had historically low rates and we're thinking rates are moving up. Now, an adjustable rate mortgage, the rate can change typically once a year.
Right. So it just depends on what you are suggesting for advice.
That's right. And then home equity line of credit is essentially a line of credit tied to your house that you can get in and out of.
Always great information.
Thank you very much.
If you want to find out more information, there it all is up on the screen for you. I've been chatting with Bruce Dodd from People's Home Equity.